So the tax system is the only system in the world where you are actually guilty until you are proven innocent. A warning to all of my investors out there. I have been getting a lot more calls than usual for audits regarding short-term rentals and real estate professional status. So here's what you need to know if you get selected for audit and you claimed either a short-term rental or had real estate professional status. Whatever you put on your tax return, you have the burden of proof of actually proving and substantiating everything on there. And that includes short-term rentals and real estate professional status. And one of the best ways to actually support your claim on your tax return is to have as much documentation as possible supporting your claim. For real estate professional status and for short-term rentals, the key is in the time logs. Because if you're going to be doing short-term rentals, they're going to be looking at to see if you actually materially participated in the activity. If you're claiming real estate professional status, they want to see, did you, number one, meet the 750-hour rule? And number two, was more than half of all the work you rendered in a real property trade or business? Then on top of that, did you actually materially participate in your rentals? And not only must you have the documentation, but the IRS wants you to have what's known as contemporaneous documentation. So what does contemporaneous mean? It means as it is happening is when you need to be documenting it. And this is one of the biggest things that I have my real estate investors do should they be doing short-term rentals or real estate professional status. I try to get them to download an app called Reps Tracker to their phone. This helps them document their time, but not everyone does that. Sometimes you can just actually go on and build your own Excel spreadsheet and keep track of your time that way. As long as you're documenting your time and you're being as detailed and as thorough as possible, that's all that matters. Remember, whenever you get selected for audit, it's not for 2 or 3 years after you've already filed your tax return. So you want to be as detailed as possible on your time log, because going back 2 or 3 years from now is very difficult if you were not as detailed as possible. Then many times these real estate investors are going to be generating paper losses through cost segregation. Make sure you get your cost segregation report ready to hand over to the auditor to support your claim for that deduction. And then of course do the same thing with all of your 1098s and all of your utility bills. Start gathering all of your documentation so you can make the audit process as smooth as possible. But hands down, the biggest thing that they will be coming after if you claim short-term rental or real estate professional status is your time log. So make sure that you keep a contemporaneous log and keep that log for a bare minimum of 5 years after you're done with your taxes.